With all the inflation and the questions about whether or not the US dollar will remain the reserve currency, it makes sense that you'd want exposure to something with no counterparty risk, whether that's Bitcoin or gold. However, when talking about gold, the average investor might not want to go to the trouble of actually buying the physical metal. And so there are options that they can use to have gold in their portfolios. The gold miners tend to be a good option, except they're more volatile than the price of gold. And sometimes they don't directly correlate to the price of gold. So when gold rises, sometimes the gold miners don't see an equivalent pop. However, there are a lot of rumors about the ETFs GLD and IAU, questioning whether or not these two ETFs actually have the gold they claim to have. For me, I use the third option, the Sprott Physical Gold Trust. Sprott is a Canadian-based company that has a number of different trusts that actually go out and buy whatever the underlying commodity is. And in this case, it's gold. However, we've been seeing a lot of volatility in the gold price lately, so this week I used stop-loss limit orders to lock in some of the gains that I'd seen in my physical gold position. My stop-loss got triggered on Thursday with a sale that went through at $15.34. This sale locked in 4% in gains on shares that I bought for $14.75 back on June 22nd of this year. It also lowered my per share cost, not much, by 0.73% down to $14.89, but I wanted to free up some capital and reduce some allocation in case gold tests its recent low. Accordingly, my next buy target is at $14.61, just a little bit above the low that Physical Gold Trust saw back in June. And my next sell target is $16.06, slightly under the high the Physical Gold Trust saw earlier in 2023. If you want some gold exposure and you don't want the miners or buying physical bullion, I find that the Sprott Physical Gold Trust really fits that bill.